If we go into a recession, does that automatically mean that we will see home prices fall and them fall pretty quickly? Now, thanks for tuning in. My name is Joshua, local realtor here in the Sacramento and Roseville area. So, with the recession, there's been a lot of talk about if we're in a recession or not, especially in the equity markets. Just, if you go onto the stock market or any kind of trading news or basically news anywhere, a lot of this talk has been thrown around about us being in a recession, and actually for good reason too, because we had 2 consecutive quarters of negative GDP growth that has basically started in 2022. So if we actually go to my little presentation I got here, we could see that the National Bureau of Economic Research defines a recession this way. A recession is a significant decline, keyword is significant, in economic activity spread across the economy, normally visible in production, employment, and other indicators. Now, a recession begins when the economy reaches a peak of economic activity and ends when the economy reaches its trough. Now, if we go over to Investorpedia, you can see that a recession is typically recognized with 2 consecutive quarters of economic declines. Now, the National Bureau of Economic Research, which officially will declare recessions, says that the 2 consecutive quarters of decline in real GDP is actually not how it is defined anymore. Now, decline in economic activity spread across the economy, lasting more than a few months, normally visible, another keyword is visible, in the real GDP, the real income, real employment, industrial production, and the wholesale retail sales. Now, basically what they're saying right here is if we see a significant decline in basically the GDP, the real income, the employment, the industrial production, as well as the wholesale retail sales, if we see a significant decline, then the National Bureau of Economic Research will declare if we're officially in a recession. So if we actually go back and look at these individual factors, the GDP, the income, the employment, industrial production, and wholesale retail sales, we could see if they are beginning or what they're actually seeing, right? So this is the GDP per capita, and you could see that we typically will see a peak before the decline goes into a recession. So you can see back here from 1991 all the way to 2000s, we just had a really great GDP level, and then it started to peak out, and shortly after that we had a recession. Back here from the 83 to 90s, it was going strong, and then it kind of started to peak out, and then next thing you know, we had a recession. Over here in the 1980s, where we had 2 recessions in basically a 4-year span, it became level, like stagnated, and then it dropped, it came back up, had like a double top, and then it came back down. Even back here in the 70s, it had a nice run up, became stagnated, and then it came down. So as we look over to present day, which is over here on the right, we had what is looking like a top in quarter number 4 of 2021, and it's been on the downward trend ever since then. So while it's not pretty substantial, it is starting to go down. So we'll see as we get the quarter number 3 results what it is looking like. Now, this is the real median household income in the United States, and you can see, just like the previous chart, that this is more I got the timelines scrunched up bigger here, so we only go from 1988 to present day, and you can see that we had a peak, and then it starts to drop pretty substantially. Then we have a recession in between, have a rise, it comes down into a peak, and then it goes and then it comes down substantially with a recession in the middle, as well as we have another rise and then a peak, and then it comes back down. So right now we had a real big rise going into 2019, and oddly enough, ever since 2019, it has just been coming down pretty substantially since that 2019 peak. So we're going to have to continue to watch that and see how much lower we can go before a recession happens. But as we move on to all employees, total non-farm, it's almost the same thing. It's not as dramatic though. We have a little peak, then we go down, a little peak, and then we go down. This one in 2008, it was a big decline, but we had a decent one in 1982. It wasn't too bad in 1990 and 1991, as well as in the dot-com era. So we had a pretty good one here in the 74 region. But so right now, we're still not up at our January 2020 levels. I mean, we're very close, but we're still not quite there. So this is on the uptrend and looking very good for all employees, total non-farm. And then we go over to the industrial production. We tend to see a topping pattern, and then it'll drop off substantially. Now, this isn't an indicator of when we're gonna, when the approaching time of going into recession. There's obviously a lot of factors that go into it, but just from a charts perspective, we can kind of see the trends whenever we start to go up. Like this one was almost immediate. We were going up, and the next thing you know, it just fell off a cliff. Over here in the early 2000s, we saw it kind of become stagnated and begin to turn down, and then shortly after that, we got into a recession. And then back here in the early 90s, it just went up and then just came back down, but it recovered pretty quickly after that. As well as over here in the 80s when we had the double dip recession, it began to came up, it jumped up, and then we came all the way back down into the recession. So as we move over to here, the chart right here is looking pretty good for our industrial production. It continues to go on the upswing, and it doesn't look like it's been turning at all, really. Basically since, let's go back into, what is that, October? Yeah, October of 2021, where we had a little decline, or it's actually September, excuse me, where we had a decline, but it's looking very, very good. Now, if we go over to the retail sales or inventory, the retailer's inventory to sales ratio, you can see here that the inventory, we've had some, obviously due to the pandemic, we've had inventory issues, as I'm sure everybody knows. But ever since the bottom here in October of 2021, our inventory is now, it's not close to the levels that we've seen before up here in the 1.4% range, but we're beginning to be on the uptrend. So if we could see these continue to come up at least to the point of going into November of 2020, is looking very good for the inventory to sales, meaning that inventory is coming up. So as we jump over to merchant wholesale inventory to sales ratio, you can see that in the recessions, we tend to have a big jump up, as we saw in the pandemic of 2020, and as well as the housing crisis in 2008, 2009, as well as a little jump going into the dot-com bubble, where we had it jumped up, came down, and then jumped up, as we see right up there. And this one was just straight up to straight down. So we're still down here at these levels. But what's interesting is, if you guys could see it, that's a little like almost a straight line. It's barely going down, but it is basically becoming flat with the merchant wholesaler inventory to sales ratio. So if we go over to my graph right here, this is that recessions don't always equal a housing crisis. Now, back in the 1980s, home prices actually grew by 6.1% in the 1980s. And then the following year, during the recession, the home prices jumped 3.5% as well. Now, if we go over to 1991 during that little dot-com, it wasn't the dot-com, but if we go to 1991, the recession, home prices only dipped by 1.9%. Now, moving over to 2001, home prices actually grew by 6.6% during the dot-com bubble, which is pretty substantial. And obviously in 2008, we had home price decline at 19.7%, which was one of the biggest on records. And now in 2020, the little mini recession that we had, you could see that home prices actually grew by 6% in 2020. Now, just from this graph alone, and it didn't include the 70s when we had a couple of recessions during that time, but just looking at this alone, it really could go both ways, really depending on the type of recession we get and what is set up for the future. So based on this graph alone, our last 6 recessions, we've had more positive gains in the home price market than we have had a negative price. So it's really too early to tell exactly if home prices are going to decline if we even get a recession. Again, the last video I did, we were at 2 consecutive quarters of negative GDP growth, but there were negative like 1 point, I forget the exact number percent, which is still negative, but we could easily churn up from there, depending on the economic data that comes out in, I believe, 2 months for the actual US GDP. But with the graphs here, I mean, there really isn't enough data, obviously, for the National Bureau of Economic Research to come out and say that we are in a recession, because it is definitely, again, too early to tell if we'll see home prices fall if we go into recession. Well, again, as always, thanks for watching my channel, and I will see you guys next time.